Hello and welcome. This is Jason Baker with Sunday Paper Trading. Today is July 13th, 2020. So I'd like to answer the question today. With today's big kind of market move down, we were actually high in the morning and then boom, just a big unload of stocks. Is this it? Is it time to get out of stocks? Well, let's go ahead and take a look using a tool that I like to prefer. It's called TC2000. I'll provide a link for it below. And essentially, I've been using this tool for many, many years because I can't do this kind of analysis with anything that's provided by my normal broker. So looking here, what I've done is I've actually set this up so I can monitor all of the 12 individual sectors and various industries within those sectors and leaders within each of those industries. So the first thing I like to do is I look at the S&P 500. So today we had a decent, 1%, almost 1% downward move. The S&P is still in an uptrend and it's still within its daily volatility range, which is represented here by these little lines. I've actually configured TC2000 to report what is a 50% up or down move, what is between the last 7 days, what is the historical range, as well as 2 times that amount. So I know that's something that is quite exceptional. This is still within a normal daily move. Now, taking a look here, you can see that all the industries today or all the sectors today were down except for utilities. Now, looking here at utilities, you can see kind of the bigger picture. Utilities is going into a triangle consolidation. Usually what this means is buyers and sellers there's really no leader at this point. We're starting to consolidate. Usually what will happen here is a triangle consolidation either will turn into a longer sideways move. So we're going to probably just see price fluctuate between these two support and resistance zones, or we're going to see a breakout move to the upside or maybe to the downside, which is what people may fear. So right now, I'm not really too worried. This is kind of a wait and see. Moving on to the next one, in this case here for probably no specific order, we have utilities. Now utilities is still in its uptrend, but if you zoom in here, you can see another consolidation, which just means somewhat indecisiveness, but the longer term trend is still up. Financial services, in this case, still a triangle consolidation. We may get a break below this key support level, but again, nothing to be too alarmed about. Basic materials is still in its continued uptrend, though it is kind of stalling. We're not seeing some of the major moves that we saw in late May, early June. Healthcare. Well, healthcare is the first one that fell out of its trend channel. Obviously, it's been very speculative, and people are trying to determine, whether or not they can take advantage of coronavirus antiviral drugs and some of the other benefits. So a lot of rumor mills going on there. In that case, we've kind of flattened out again, but another consolidation level. We are outside of the upward trend channel. We're about to fall below the triple moving averages. So I'd probably be staying away from healthcare. As you can see here from this side of the chart, it has been outperforming the SPY weekly, but on the monthly and quarterly basis, it's underperforming. So there are very few sectors right now outperforming the S&P 500. Next comes consumer defensive. Consumer defensive still in its existing uptrend, albeit a kind of a wide one, but it's starting to consolidate as well. Energy has broken out of its existing uptrend and it's consolidating. And a pro tip for those of you that use moving averages as one of your indicators on your charts, which I do recommend, especially for new people, when they start to consolidate like this, ignore them, right? When you see movements above or below, if you start to create a trading methodology that depends on being above or below certain moving averages, when you see them consolidated like this, they are useless, okay? That's the whole point. They are the most beneficial when you see these big gapping moves below or above. Otherwise, not all indicators work at all times, and so it's important to recognize when that failure occurs. Let's move on to communication services. Again, a triangle consolidation after a very big run up here, right? So a lot of people, this could be considered make your story up, right? It could be just simply profit taking, and there's no more interest in this sector. Of course, the S&P 500 is still continuously in its upward move, followed by real estate. Real estate, again, we could probably tighten up these trend channels here. I could even argue that this is the trend channel and real estate's fallen out of that. Again, it's in a triangle consolidation. Next would be consumer cyclical. This one is still moving higher, right? Consumer cyclical, such as, the Walmarts, the Targets, if they're not being looted, that is. You've all seen it on TV. But you know what? It's not certainly hurting the individual stocks themselves. But as a sector, still outperforming. And then, of course, the golden child, which has been technology, which has been benefiting. Though, despite the sector took a 2.6.4% hit today, again, we've seen a couple of those examples prior, and they were followed by some very quick reversals. Now, again, I'm going to be concerned if we fall below this 20-day moving average in purple, we fall outside of this particular trend channel, and I'll be concerned about my positions in those particular sectors. So today was just simply a bad day, but it's nothing. None of these moves are outside of the norm. Other things that I would be looking for is who is outperforming the SPY weekly. So the SPY being an ETF representing the S&P 500, I could look here at the utility sector. So it looks like they are outperforming the SPY. And we could look at the individual industries here on the left. So we have aluminum, agricultural inputs, resorts and casinos, and I can just see who are the winning casinos. Look at this. We've got Melco. Wow, substantial 16% move today. Wynn Resorts. That's an interesting one, right? So Wynn Resorts, that one may be a nice one to get in. Technically, I don't really like the chart, though. The Sands Casino. And let's see here, a couple others. Here's one. I do kind of like this chart, BBX. But it's not really, well, it's doing 2% better than the SPY. And the thing is when you're investing in individual industries, they'll usually move collectively together. But it's much like a horse race. All the horses will eventually finish. There are going to be some leaders, like in this case right now, it's Melco. But whether or not, and this is interesting, despite the market downturn today, whether or not they're going to continue even higher after this move, I would imagine there's going to be some kind of correction. But I'd be certainly looking at this particular industry. But I'm not really going into industry analysis today. I do kind of want to look from my own portfolio, how what I might be considering. So I'm going to focus on two positions that I'm in right now. The first one is DocuSign, and this is in the technology sector. And you can see here DocuSign has been doing fantastic. This is my second position in DocuSign. I got in here at 165. I've been writing this up with a profit target of 229. Was my target, but then of course a 9.56% move. That's kind of scary, but it's actually within its average true range. So what you can do is you can add something here called the 7-day ATR. Now I don't have to go into all sorts of details. Whoops, that's my custom formula. Let's go ahead and add ATR. Now the average true range, what it does is it gives you an idea is what is a normal up and down day based on the historical averages. So what we'll do is we'll just change this to 7 days. I like that. It's more recent. And as you can see here, as of today, the daily range was $14, but yesterday the range was about $11. So for it to do a $20 move, that is twice the daily range. So that is a little bit exceptional. All right, you don't want to see that on a single daily basis. So that would certainly be of concern. Now these lines here are telling me exactly what potentially could happen to tomorrow. Another 2x move would fall below my initial entry price. So I'm protecting myself, putting in my stop right now, and if this breaks, then I'm going to go ahead and take whatever profits. Though I really was enjoying the profits up at this level, hey, you know what? This is what happens, and the trend could end tomorrow. Another one that's been a golden child, obviously, of the market is Zoom. Zoom Communications got in at 225. I have a stop now at 233 with a profit target of 300. Now, obviously, we're creeping up to that, but did not see that today with a $15 move. Let's take a look again here at the ATR level. So we're going to go ahead and add, I'm not sure why that disappeared. So we'll add this here, and what we can do is say, what is the average true range for the last 7 days? Here on the right-hand side, as of today's move, it made $11, but yesterday's move was around $9.87. So today's move of $15.57 is about a 1.5x the ATR level. Now that is slightly exceptional, but not just astronomically panic-stricken. Right, so these kind of moves can happen. The market does get spooked, and looking historically, we have had some drops, and it's still maintained its upward trend. So to answer the question, am I going to get out of the market? Not quite just yet. I am getting ready to pull the trigger because I'm starting to see weakness in which even my profitable positions are not outperforming the S&P. When that starts to occur, that's an early warning sign that this market may be ready to tip over. We're not seeing it technically, but certainly one day does not make a trend. But for now, I'm going to be looking very closely at the next couple days. Then I'm going to probably exit, if necessary, take my existing profits off the table and look for new opportunities. And I'll even share some techniques on how I find when the market's coming back. So that's it for today. Until next time, good luck and good trading.